What if the money you earn today could grow and multiply on its own, creating financial security and freedom for your future? Stock investing has been one of the most powerful wealth-building tools for generations, and with the right knowledge, you can make it work for you too. Welcome to HowExpert Tip of the Day, where we bring you real-world tips from our how-to guides on all topics from A to Z. If you want to learn even more in-depth strategies, examples, and techniques on this topic, check out HowExpert Guide to Stock Investing, available at Amazon, Audible, Barnes & Noble, Google, Kobo, Apple, Spotify, and all major bookstores as an ebook, paperback, hardback, and audiobook. Today's topic is all about stock investing, and here are the HowExpert Top 10 tips to help you build wealth, grow your portfolio, and invest with confidence. Tip number 1, define your investment goals. Are you investing for retirement, extra income, or long-term wealth creation? Knowing your purpose determines your risk tolerance, time horizon, and stock choices. For example, retirement investors may focus on dividend-paying blue-chip stocks, while younger investors might lean toward growth stocks. Having a clear goal keeps you disciplined and avoids impulsive decisions. Tip number 2, learn the basics first. Before you put money into the market, understand the fundamentals: stocks, dividends, ETFs, mutual funds, and market indexes like the S&P 500. Educating yourself builds confidence and reduces mistakes. Beginners who skip this step often panic during downturns, but knowledge gives you the patience to stay steady. Tip number 3, diversify your portfolio. Never put all your eggs in one basket. Spread your investments across different sectors, industries, and even global markets. Diversification helps reduce risk because when one stock drops, others may rise. Think of your portfolio as a safety net. It's stronger when woven with many threads. Tip number 4, think long-term. The stock market rewards patience. While daily swings can be stressful, long-term investors who stay invested typically see strong growth. For example, the S&P 500 has averaged around 10% annual returns over decades, despite short-term crashes. Focus on where your money will be in 10, 20, or even 30 years, not tomorrow. Tip number 5, start small but stay consistent. You don't need thousands of dollars to begin investing. Many brokerages allow you to buy fractional shares, meaning you can start with as little as $10. The key is consistency. Investing regularly, such as monthly, builds wealth steadily over time. Small steps compound into big results. Tip number 6, research before you buy. A stock isn't just a ticker symbol. It represents ownership in a real company. Before investing, study the company's financials, leadership, industry position, and future growth potential. Ask yourself, would I want to own this business for the next 10 years? If the answer is yes, you're on the right track. Tip number 7, use dollar cost averaging. Trying to time the market perfectly is nearly impossible. Instead, invest a fixed amount regularly, whether the market is up or down. This strategy, called dollar cost averaging, helps smooth out volatility and builds your portfolio steadily without the stress of guessing the perfect time to buy. Tip number 8, reinvest your dividends. Dividends are like a reward companies give their shareholders. Instead of spending them, reinvest them back into more shares. Over time, this accelerates growth through compounding. Reinvested dividends can turn a modest investment into a substantial nest egg. Tip number 9, manage your emotions. Fear and greed are the biggest enemies of investors. Many people panic sell during downturns or chase hype stocks during bubbles. Stay rational by sticking to your strategy and remembering your long-term goals. Successful investors see market dips as opportunities, not disasters. Tip number 10, keep learning and adjusting. The stock market is always evolving. Continue to educate yourself through books, courses, podcasts, and financial news. Review your portfolio periodically to make sure it still aligns with your goals. Adaptability ensures that your strategy grows with your experience and market changes. Stock investing is not about luck. It's about knowledge, patience, and discipline. By setting clear goals, diversifying, staying consistent, and managing your emotions, you can build a portfolio that grows steadily over time. The best time to start investing was yesterday, but the second best time is today. Take action now, even with a small amount, and let time and compounding work their magic. For even more tips, techniques, and practical examples on this topic, check out HowExpert Guide to Stock Investing, available at Amazon, Audible, Barnes & Noble, Google, Kobo, Apple, Spotify, and all major bookstores as an ebook, paperback, hardback, and audiobook. HowExpert publishes how-to guides on all topics from A to Z. Visit howexpert.com to learn more.